All right, folks, welcome to the 2:30 session of the Indiana Organic Grain Farmer meeting. We're going to go ahead and get started with navigating your organic insurance options. Today we have with us Roxanne Brixson, so I'll turn it over to her once she gets her handouts distributed to you all.
All right, I think that's on, but I don't think I'll need it. Can you guys hear me okay, or do you want me to use the mic?
If they close the door, I think you'll be okay.
Okay. I think we'll do that, and then I'll just turn this off. Yeah, let me get a... Going right, is that forward? Right, okay. All right, well, let's go ahead and give you a quick introduction here of myself. First of all, who here is right-handed? How many people are left-handed? Nobody? Okay, well, since you can all do this, I know you can raise your hand and answer questions. So how many of you guys have crop insurance right now, like on your farms? Okay, so do you know who your agent is? You have to go talk to him a couple times a year. Do you know who the company is that actually writes your policy? Whose header's on there? Are any of them Great American? Yours is? You're already my favorite. All right.
Yours would be, though.
You know. Anyway, so I work with Great American Crop Insurance. I've actually worked with the same company or in the same location for 21 years. After a couple of mergers, buyouts, whatever you want to call them. I've still been with them for 21 years. And this is the label we're under now. So I work with Great American Crop Insurance, and we deliver the RMA's crop insurance program through the government. And I'm based out of Eau Claire, Wisconsin. I think I've got that up there, which is about an hour directly east of Minneapolis, St. Paul. So that's where I hail from. We have a 45-acre farm down the road from our house, which used to be my in-laws' place. And we've raised a few things over there. Lots of horses, some cattle off and on, pheasants. We were a pheasant farm. We raised rabbits for a while. Not too much for crops. We tried strawberries on a year that they all got drowned out, so that didn't work out too well. And we have a large hmong population up in our area, so we also rent some land out to some hmongs. And currently, horses are the trade that we've got going on the rest of the pasture lands there. Aside from that, the funnest things that we've had on the farm are these creatures here. So those are my grandkids. And the little guy in the bottom left there, he's with me on this little trip. So that's where I am. I say that I only had kids to get to grandkids. So they're the fun. They're the fun part of it. So I'm just going to get right into it. Since you guys have had crop insurance or do currently, you pretty much will know some of the language that I'll use. So I don't have to try to explain all the acronyms. However, if I do say something you don't know what I'm talking about, just raise your hand. I know you can do it, and let me know what the question is. So just a little bit of background here on RMA's organic crop insurance. Quite a few years ago, of course, they didn't have anything to help out organic farmers on the pricing or the yield side. On the farm. So there wasn't anything written into the language, so it was something that's evolved over time, over the past decade or so, where they've tried to give something that's a little bit more applicable to what you guys are doing out there in the field. So organic rules are now in the crop insurance handbook, which is my Bible. I'm in the underwriting side of the policy, so that's me. I'm the rule person. So that's where I come from. One of the biggest things that RMA's had to do is try to find a price point that works out well for organic farmers out there. So they definitely didn't want to go ahead and be using $4 a bushel because that wasn't going to work for you guys out on the farm. That's not what you were selling for. That probably wouldn't even be a good break-even point for you guys if that's what you were selling for out there. They also had to address the expected yield difference between organic farming and conventional farming. On the organic side of the farming, you're not expected to make quite the same yields out there. So they needed to get some data together to decide what that all entailed. Causes of loss also are different out there. So we have a lot of rules. Can you pass that out to her? Thank you. We have a lot of rules that have to do with the causes of loss and what is covered or not covered out on the farm. So of course they had to open that up and be a little bit more lenient on that because you're not going to be expected to apply herbicides or pesticides out there. So there was some language added into that. One of the terms that they use a lot is good farming practices, and good farming practices means that you're going to take care of the crop that's out there in your field. And of course they had to change what that meant from conventional to organic farming. So let's take a look at where we are today, and there's 3 topics that we want to kind of cover. Organic requirements to get into the RMA crop insurance program, organic yields and APHs or units, and this is how your policy gets set up, and then the prices or contract prices that you can use in there. So the requirements to insure your crop organically under RMA's subsidized crop insurance program is that you do need to have an organic certificate. Unless you are a very small organic farmer of $5,000 or less in revenue from organic, you don't have to have a plan then. Otherwise, you do need to have a plan and certificate, and you'll need to get those into us in any year that you're farming or into your insurance agent and into the insurance company. So you do need to have those. A lot of times they don't come in time for you to have crop insurance over the summer when you're turning in your acres to your insurance agent, so we do allow those to come in later in the year, but prior to when we can make a payment to a farmer out there. RMA has organic crops available pretty much everywhere. All you need to do is look in the actuarials. That is basically the data bank of where you can have crop insurance in any county in the U.S., what county crops are insurable, what practices and types are insurable, and what all the exceptions are. You can find those out in the actuarials. If you don't know what I'm talking about with that, I can always give you a link to go out and look at what's available in your own counties. If it's not a covered practice in the actuarials, then it is typically uninsurable without a written agreement. So if by chance you were ever in a county where there was corn but not organic corn in the actuarials, you could still possibly get coverage by filling out a written agreement. You do that through your insurance agent. They send that into the company, which is me, and we go ahead and send that on to RMA's branch offices to get it approved. We don't have to do that very often anymore because pretty much around the country, organic, corn, soybeans, wheat, all your typical crops are covered organically. Another thing to just keep tabs on is a couple of deadlines a deadline that I listed there is APHs. Do you know what I mean when I use the term APH? Your history for a certain area. Your APH has to be kept separate for organic and for transitional history databases, and then all records have to be kept separate between your conventional, your organic, and your transitional crop out there. That's very easy to do since you're typically going to sell it maybe to a different market. And you'll get different prices, different receipts for all that stuff. Let's go into the yields and units. What I have up here right now pictured is a couple of databases for conventional units up there. So if you were raising corn, and these came out of Tippecanoe County here, you can see that they've got 10 years of activity in each of these units. They're both just in separate sections out there, but they have 10 years worth of history. And the things that we can do to these databases to make them more attractive for coverage is the acronyms that I have listed on the right over there. So these options you can take or not take on your policy, and they apply to conventional crops, and some of them will still apply to organic crops out there. So I'm just going to give you a quick rundown on what they are. The first one up there is a yield exclusion. If in the past there's been a bad year, such as 2000, I think in this example, 2015 and 2003, no, it's 2012, I misspoke. 2012 has a really low yield. If in 2012 those yields were low and they were lower than 50% of the county history out there for 10 years, then what they're going to do is they're going to allow you to kick that out of your database so that that's not dragging your yield down. You have to tell your agent you want that option, then that yield will come out of there. They recalculate your database, and maybe your approved yield goes up 2, 3, 4 bushels, possibly even more. Yield exclusions are available on organic practices as long as that yield exclusion is listed in the actuarials. Yield adjustment, that's also available on organic ground. If you happen to have a loss out there and you harvest less than 60% of what the county T yield is, a lot of times that county T yield is less than what you're actually farming out there, then you can substitute that year with that 60% of county yield out there. So that actually would raise your approved yield also, in essence raising your guarantee. The trend adjustment, that's one that typically raises your approved yield significantly. That is just an option that you can add onto your policy, and when you do, it actually gives you a little bump in every year in your history. So for this APH right here, the column I have where the arrow's pointing over to the trend adjustment column, you'll see that I actually have in that PowerPoint in front of you, if you look down near the bottom here, there's a trend adjustment factor of 1.61. The county has said, based on data that they have created or looked back on, is that historically they think that you could raise more corn now than you could have 10 or 15 or 20 years ago. So this trend adjustment, this 1.61, is a bushel amount, and they're going to let you add 1.61 bushels to last year's history, and then they're going to let you add it twice if your history is 2 years old, and they're going to let you add it 3 times if it's 3 years old. And so as you look back farther and farther, the oldest yield on there is 2004. They're taking that yield from 185 over to a 209. So then they're going to recalculate your history and get a new average. So the trend adjustment is actually picking up your yield significantly. The math going across closer to the bottom, you can see where we add these up. No matter what company you write with, a lot of times this data is on your APH for your farm. But you can see the total bushels and what the average is. So as we kept adding these options, your approved yield went up, in essence, creating a higher guarantee for yourself. The problem with the trend adjustment, it's not on organic yet out there. It could be, it's open to it, if they put it in the actuarials, but there just might not be enough data going back far enough for them to create that trend factor yet. So when they get to that point, that could be a real good option for people who have the organic policies with history out there. The other two at the bottom, the yield cup and the yield floor, they're both available on organic policies. A cup just simply means if you do poor this last year, they're not going to let your approved yield fall more than 10%. And a yield floor, that just means if typically on that piece of ground you don't grow crop very well, and it's less than the T yield is for the county by more than 20%, then there's a floor that we will leave that at. We'll never let your yield fall below that. So if the ground or it's a poor farmer that doesn't create a whole lot of production out there, that's one way to keep his production up. On any one of these, they do typically charge you a little bit more on the rating side because you're riskier because we're bumping your yield up. And that's what that amounts to. So on the organic side, once you start going organic and transitioning, here we have two different databases. In the second one now, all I've done here is show you what it's like to first go to a transition yield. That history's gone. You don't have any history with transitioning. So now all of a sudden you're going to get whatever the county T yield is, and on an organic or transitional database, it's usually significantly lower. You don't get into the options because you don't have any of your own history to apply those options onto. So suddenly your guarantee is going to go way down on that transitional unit. The other thing that's going to hurt you is that you still can't get an organic price on that either. But there are some ways that maybe you can work around this a little bit with your insurance policy. This is probably one of the biggest headaches that people face because they still need to make sure that they got their loans and that they have enough insurance out there to cover whatever they're going to borrow at the bank. So their lenders may want them to take higher coverage levels, make sure that they just have enough coverage out there. If you're going to take your whole operation and transition it at one time, you could see a serious decrease in the amount of yield that you can potentially insure out there. On a positive note, I did put an X there. Transitional and organic are worked separately from conventional databases. So at claim time, if your causes of loss are different, if your drought has hit your organic a lot more than it has hit your conventional crop, they get to be worked separately. One won't cross the other one off at claim time unless you have an enterprise unit. Okay, next I wanted to bring up, if you have a farm with many fields like this, what is one of the ways that you can start to transition and not have those yields hurt you so bad? So if you have multiple fields out there, maybe you could start with some of your smaller acreage out there. For instance, this little red one up on the right. I have 2 sections here with multiple fields in it. If you took the red one up on the right and just did that 40 acres first and started to transition that, you're going to have a lower yield on that field right there, but it doesn't apply to every acre that you have planted, so you're still going to have decent coverage on the other fields. Once you transition and you start getting your own actual history and that starts to fall into your APH database, you'll watch your APH go up or your approved yield go up. By doing it slowly, the one thing that you might run into is if you have a lost year or two, and then you're ending up dragging those yields down also at the same time rather than go up.
That's an interesting thought. So let's just call it field up there on the left that you got in section 17, field 1.
Mm-hmm.
And to the right of it's field 2. So you're saying if you go 3 years and get field 1 out of transition, doesn't field 2 have to go through transition? So you could have 2 separate databases for
Yep.
that section.
Well, you'll have 2 separate databases. You'll have one for conventional that you might still be raising. You'll have one for transitional.
One for certified.
And one for certified organic, but you're 3 years away from that. So on your transitional side, let's just say you take the red one and the yellow one over there. One's corn, one's soybeans. The next year you flip-flop them. Now you got 2 years of corn, 2 years of soybeans under your belt. And you have a yield that maybe you can work with. And when I say work with, what I'm getting to with that is that, let's just say on the left here in section 18, you haven't planted anything transitionally yet. It's still all conventional. After those couple of years, you want to jump into this other section. You can use the simple average T yield like you do on added land. You use it for added practice type variety. You now have a database that's a little bit higher. Instead of 114, maybe it's a 130, maybe it's a 140, but it's a little bit more in line with what you're going to be harvesting out there or what you want to cover for your organic. So that's kind of one way around it. If you have a farm operation that can sustain that and you want to do it over time. You know, there's other headaches with that. You know, you don't want to cross-contaminate. If you're harvesting your conventional and you're also harvesting your organic, you got to clean out all your machines and all that jazz. But you know, you have other things to think about that way. But if you need to make sure that you have the liability covered out there, this is one way that you can do that. Okay, let's see here. Prices. The other thing that they wanted to talk about or improve on the government or with the government was the prices. Oh, I'm sorry. Yep.
Yeah, I did have a question. So, if you, let's say, you 5 years in and you've got an organic database, and then you transition other land, and maybe you don't want to take insurance on your transitional ground, just as an example. You can do that, but then once that transitional ground is fully certified, if you're enterprise units, will you be able to have that added land at your organic APH?
The simple average will only pull from the same practice type variety. So if you're adding new land or taking a new section and making it transitional, you can only pull your other transitional history average yield over there. So you can do that. If you're enterprise unit, you're not going to get the benefit of working your organic separately from your organic and transitional separate from your conventional. Then they're all going to work against each other. You can't choose to not insure your organic. If you have a certificate on it, if you insure corn, you're insuring corn in a county, so you can't choose to not.
You can't exclude the transitional acres either.
Nope, you can't exclude your transitional acres. I do have another slide towards the end, kind of a,
You can have a different coverage level, right? Like you have 85% RA
on conventional and then change it for, nope, you cannot do that yet. Nope. You know, that's something that organic groups, as they lobby with the government and start wanting more, you know, things like that, then they can, you know, they'll maybe consider doing something like that. They already do that with like high-risk land, that you can insure at a different coverage level. And it's possible that they would do that in the future under organic, but currently they do not. Yep. Yep, irrigated, non-irrigated can be separate levels, but they have not.
Interesting, yeah. I
Yeah.
have policies with Great Americans, and I'm gonna have to sit down with my agent.
Yeah, I don't give advice.
I mean, it's my husband's question, and I have trouble understanding this stuff. so
Okay.
bear with me. So if you have a conventional crop on your farm, and you have acres in transition, when you go to do crop insurance, you've got to, if you insure that conventional crop, you've got to insure that organic crop. You can't not insure the organic.
If you didn't have a certificate, if you weren't, there's a lot of, yeah. There's a lot of people that sell, I'm gonna say off the grid. There's like, I know people that farm organically, and I've talked to at different conventions and things, and they have farmed organically for years, and they might sell to like the local school district, but they don't go through the certification process at all. They're not required to. They're not selling it labeled as organic, even though they say that it is. And the school assumes that, you know, right. So there are people that raise it like that, but no, there's no, and you can't insure it. If you're raising it organically and have a certificate, you can't insure it as conventional. You're not allowed to do that.
But if, say you've gotten to, you know, okay, you've still got acres that are conventional, and then you've got this field over here that's certified organic, and you're looking at crop insurance, if you insure that conventional field, you have to insure that organic field.
Yeah, there's not any language I know that you can take that out.
Okay. I think that
You're making me wonder though.
And to be clear, Roxanne, on the optional unit example that you gave there, you were showing the field in red as a transition to corn, but you had those other two fields in the same unit as different crops.
Right, I was just,
If you had the same crop, they're gonna get thrown together like first crop, second crop beans, right? Because you're talking about practice, I mean, it'd be the same as the enterprise unit.
you're talking about like during a loss?
If you're, yeah, in other words, within a section.
Yep.
Within a section.
Yep.
On optional units. If you had organic corn and transitional corn and
Conventional.
conventional corn, then that's not gonna work any better than
If you're on optional units, your transitional and organic are on their own. They're a separate optional unit number. And then your conventional can get worked separately. You have to have optional units. You can't have an enterprise unit. If you have an enterprise unit, you're bringing them all back together again.
So you're saying even not just, we're
Yep.
talking about a practice.
Yep, different practices within section 17, your organic and transitional can be on a separate unit than your conventional. Your transitional will still stay with your certified organic. You know, they're going to be worked together, even though they're worked at two different prices.
The same crop in the same unit and not get thrown together.
Yes, yes. That only works for the organic.
But if I'm hearing you right, enterprise, let's just say you have a claim on organic practice in a county.
Yep.
But your conventional does not have a claim. The total revenue from both of those
Yep.
gets
Slammed together, yes. And you're working the lines that are organic with the organic price, and you're working the conventional and transitional with the conventional price.
separate APH database, different practice.
Different practice because you're coming up. I mean, you're still have to have a weighted amount at the end. You have to have a weighted amount. So your conventional yield and conventional price, your transitional yield, transitional price, or conventional price, and your certified organic yield with that price. Once you get those all thrown in the pot, then you determine if you have a loss on an enterprise unit. But you can have them in separate units if you're optional.
But it's 30% more premium.
Ooh, 30% might be a little light. It's a big difference because you not only get a better discount, you get a better subsidy on enterprise unit. And that's why people take it. I mean, I'm pretty sure, I don't know about Illinois or Indiana so much, but in Iowa, oh gosh, it's got to be 80%, I swear, take enterprise unit. And I think that's because the price has really been what throws people into a loss a lot of different years. And so that is a driver.
They don't have the variability.
Right. Okay, prices. So this was another big point, of course, that RMA had to work with to please organic farmers. Just having traded prices out on the market, you know, they're not good enough out there. $4 soybeans isn't going to, you know, appeal to you at all if that's what you're going to get paid on your insurance policy when you've got a lot of extra money invested in your organic crop. So they have what they call organic factors that they came out with, and we'll go through a couple of examples where you'll see how those come into play. The other thing that they do have is contract pricing. So not only are you going to get the benefit of having a better traded price, let's just call it, with the organic factors, but you also have the ability to up that by going to a contract price if you are contracted with your crop to have it delivered somewhere. Forward contracting is not the same thing as actually having a contract with a processor to take your crop. So on this example, I've got 6 years worth of prices here, 2013 through 2018. If you look in each grid, you'll see the conventional prices, both projected and harvest. So in 2013, they projected $5.65 a bushel. They took it times a factor, and the organic price was $8.79. So when we could insure organic in 2013, that's what we were going to give you for a bushel of corn on the policy. At harvest time, the price came in at $4.39 on the markets. The organic, we multiplied it by the same factor that we did at sales closing date, and we would give you $6.83 at harvest time for that. So that's what we would count that as, or count it as at the end of the year against you on a claim. So in 2013, you can see that bottom row, the factor was 1.556. As RMA has gathered more data on organic crops, you can see that that factor has slowly risen, dipped a little bit in 2015, but you can see even ever since it still has risen, even if just a little bit from year to year. So that tells me that they're getting somewhere where it is maybe just a little bit, you know, kind of stable, where the market is. You know, that could change. You know, maybe at some point, the availability will have an abundance of organic crops and not the people buying it as normal. And that could maybe go down, you know, laws of supply and demand. They could do more data mining and see that maybe organic is actually higher than that, and then you'll see the increase in those from year to year. I'm unsure what data they look at when they get into those factors, but those are the factors that they've used in the last 6 years. And again, those factors are multiplied. If they're multiplied at sales closing date and the projected price, then they're also, the same factor is used at harvest time on the harvest price. So they don't alter that from the beginning to the end. And these were the prices across the Midwest here, so those ones would have been the same prices they used here in Indiana. They've expanded the amount of crops that they have organic pricing on. Yep.
I assume this is commodity corn, not human consumption corn. Your chart.
This would be just normal grain corn that they trade on the Chicago Board of Trade.
So it's not human consumption.
It's not any specialty corn. We just, in the crop division, we just go by, in the crops or crop insurance, we just go by grain and silage. So nobody's going to eat silage, but I don't know about grain corn.
But to answer our question,
It's not sweet corn.
to answer our question, it could be food grade or it could be feed grade,
I-
and then we'll get to the contract price then, right?
Right. Oh, yeah, that's probably true.
Okay.
So, so those prices are basically just off the board. Okay, so then the other point I wanted to make on this slide here is just the availability of an organic price on so many different crops. Here, of course, you guys are worried about the organic grains. So those are listed, the main ones are listed up above, but there are others. We don't just stop there. They have several crops that are covered underneath an organic price. If it's not something that's traded, such as oats, then RMA assigns an organic price to that. So you can get it if you happen to raise something else and you want to know what the price is. You just can look in the actuarials typically and find it in there. For this year, the prices are already out. Those came out at the end of February. So you can see that we're working with a factor this year on corn of 2.305, just up slightly from last year's for a factor. So $4 is your traded price, $9.22 is the organic price on corn. And then you can see the soybeans there, conventional $9.54 and organic $19.05 a bushel. And that factor is less on the soybeans. So then the next step would be is if you wanted to get something higher than that. So for 2018, I threw this slide back up there when I was writing this, but in 2018, the projected price for conventional was actually $9.07. In the actuarials, it allows you to go up 1.5 or 1.5 factor or times 1.5. You could get a higher price for your corn, and it could have been as high as $13.60. So that would have been the highest you could have gotten insurance for, which would have given you, you know, a pretty good chunk of liability out there. Just remember, as you use a price that high, your premium is also going to go up with it.
On the food grade,
Yep.
if you had a contract for $3.60, it's gonna be food grade. So that would apply here, because all crop insurance looks at is it's grain or it's
Right.
silage, and you're not gonna have probably organic silage, I don't know, maybe you could, but I guess you could.
You could. You probably have to feed it to your
For the
organic
most
beef.
part, it's gonna be grain, so if you had your food grade corn,
Yep.
and you had a contract on it for $3.60, then you could insure it for that $3.60.
Right, and that we do a lot of that with the soybeans. We have a lot of, because they differentiate soybeans in the crop insurance world by food grade. So if you have those, and we do a lot of that, like in Iowa, they have food grade soybeans and they have high protein and low linoleic acid, all that stuff. So as you get contracts for those, you can, you know, go ahead and insure them at a higher rate. We won't go over what your contract states. So if your contract was only for $12.50 a bushel, that's where your limit would be at $12.50. And that contract would need to come into your agent at acreage reporting date in the summer and get forwarded to the company. Yes,
Sorry.
that's all right.
There's some exceptions to what we were just talking about, on the food grade versus, and that blue, for instance.
Oh, yes. There is some different contract pricing limitations depending on what they might be. And yeah, you're right. We actually, this year now we have white and waxy. Do you guys get white and waxy corn this year? Okay, white and waxy corn, that will be a different, actually they're a little different language sometimes for your contracts.
But that's conventional, white and waxy.
Yep.
That's right, we don't have them. We don't want
Oh, yes, that's right. They did not add organic to that this year. You're right.
Can I go down that path for a second?
Blue, yes, you can. Blue, high amylase, high amylose.
So, it's, conventional, you have not had to keep a separate white corn database in the past.
Right.
And so now you have to go back and split out which acres were white and which acres were yellow. And, or how do you approach that?
Well, it depends on what you want to do at the end of the day. If you have already raised it separately and you have a good database with history in it, you can go ahead and separate that out and have your own white corn or waxy corn database. The only reason to have one separate is if you want to insure it at the contract price. So the contract price isn't exceptional. I think it's a 1.2 factor, so you can only go 20% higher. So $4, $4.80. Yep.
I mean, yeah,
Yep.
it's worth it.
Yep. Okay. So, but for some people, the 80 cents might not be worth it if you're starting all over and you have to have a T yield. If you don't have separate production already, and we ran into this when they broke out the soybeans a few years ago, the T yields went down so far. And actually on white and waxy corn, you don't have that fear. At least I doubt you do, because in Iowa, the yields are the same as conventional.
So,
Yeah, okay.
to be clear then, so even if you've grown white corn in the past, but you want the contract price endorsement this year, and you didn't want or have the capability to separate those past white yields, you could, even though it's been certified to FSA as white corn in the past, you could start with a T yield with no
Yes.
penalty.
Right, there's no penalty. The reason is because there's 3 different steps to separating out databases for this, back to this white and waxy.
10 years ago when you grow popcorn again, you better have some yields or have a, or even,
Right.
you know,
Well, popcorn's a separate crop, but, yep, but like with, right. Okay, with corn, or with the white and waxy different types, if you have history and you can't break it out, there's 3 different steps you can do to separate out into an APH. One is you separate out your acres and your production for what you know. Typically, if it's a contracted crop with a processor, you have some kind of records, you can go back and break that out. However, if you can't, then you just do what we call apportion. If you apportion, that means you know what your acres were. Typically, you've reported those to the FSA office. You can go back and get your acres even if you've combined all your production records together. And then you just prorate that out. And it's going to be the same T yield, so you're going to have the same exact yield, production yield there in your history. If you can't do either one of those, you attribute. When you attribute, you take all your production in acres and you apply it to what they call the highest yielding database or practice. And RMA has came out and said that the highest yielding practice is conventional, or is corn grain. So you have to apply it all there, and then you just start out with a T yield database on your white corn. So if you have poor history, what's your choice?
So I guess, and I don't want to take up too much time on this, but let's say you have 2 farms in a county. One farm's been in white corn since 1980.
Okay,
Other farm has only been in white corn for a couple years,
okay.
say 2 years. Is that treated differently than if you're enterprising? Or what if you have white and yellow in the same county and you're enterprising?
Well, corn is corn. So regardless of if you're optional unit or not, instead of the same section, it's the same unit. So that's not, the organic is not, it doesn't work the same way as organic does. So those ones would be together in the same unit, but different databases within there. If you're enterprise unit, it's all together, all your different sections, white and waxy and grain.
You cannot do the white corn contract price.
Yep, you can, because everything's weighted. So this database has a yield and a price at the beginning and at the end, and you just figure it out with, you know, the other ones with their yield and their prices. So you can figure those out. They are, the losses would be worked, one could kick another one out of a loss in the same optional unit or the same whole enterprise unit. Okay, so contract pricing. If you want the contract pricing, it's required that you let us know. So you do have to send in the contract by acreage reporting date. If, we always like to say, let us know by sales closing date, and the only reason we do that is because there's 2 different sets of language. Specialty crops, like you were talking about, blue corn, has a contract, and if you take a contract with words, I'm not even sure if that's a good one. Certain crops you have to use the wording from what's called the contract price addendum. Other crops use language that's already built in the special provisions. There's a little bit of deferential language in them, and ultimately there's a place where it gives you what the limits are, like your blue corn has 1.2 factor, your organic crops typically are 1.5 factor, how much coverage that you can insure them for, or how much your price can go upwards. So depending on which one you're actually using, on organic you have until actually until July 15th to let us know that you actually have a contract, and you can get that into us. So you're good there. Your contract has to have, at a minimum, an agreement to purchase. So the contract has to say that the buyer's going to buy them, and you're the seller, and you're going to sell them. And it'll either tell you how many acres they're going to buy or how much production they're going to buy from you. And that's what we use to figure out how much we can, how many acres we can put that dollar amount on, or how many bushels we can put that dollar amount on. Okay, I did want to throw this up here for liability comparison. As I said, I think probably one of the biggest problems that we have is the transitional acreage. On this particular example, I just kept the same, you have the same acres there, but I took the average yield and I kind of made it declining because your conventional should harvest more than your transitional, which may harvest more than your organic. And then your final price. So this one is not using the actual price. I created the slide a few weeks ago. But the biggest problem that you see here is when you have a transitional crop, your liability that will cover out there isn't nearly as high. You may have a market that you can sell the corn for at more than $4 an hour, or more than $4 a bushel, but we can't insure that on the RMA's insurance product that way. So that is one thing that could hurt you. Premiums, I just gave you an idea of a premium out here, so I ran this here in Tippecanoe County. I actually just used the same approved yield across the board here just so you could kind of see what the rating is like. What it boils down to though is for $576 an acre liability, you're paying less than 20 bucks on the conventional side, and that's at an 80% level, which is pretty consistent with a lot of the Midwest these days. The transitional acreage, it's riskier for us. So they're going to charge more premium for it even though it's got the same liability out there. Your certified organic is going to have that same risk as the transitional, but you're going to have a lot more liability out there too. So you can see that the rate that you're paying isn't going to be too far more on the organic side from transitional, but overall you're paying more because you have more dollars in coverage out there.
Are the T yields for organic 65% of the T yields for conventional everywhere, or is that
No.
just happen to be that way in the counties that I operate?
Probably just where you are. When they first came out with the organic T yields, they did go across the board, and I think between corn and soybeans, I want to say one crop was 70% and the other crop was maybe 65%, straight across the board. Now I'm not sure, you guys have, is it Springfield is the RO, I think over here? Okay. Where I work with it's St. Paul, and I'm not sure if they work under the same kind of general rules or not, but in St. Paul, the RO is actually part of RMA, that's one of their regional offices. Every 3 years, they re-rate and re-evaluate T yields. Is that the same as Springfield? Maybe? Okay.
They've come up a lot though in Illinois.
Okay. Okay. So every 3 years, they evaluate either corn or soybeans or a bunch of other crops. So they kind of spread it out so that they don't have to do all their work in 1 year. So if next year is the year that they're going to do corn, which I think it is for St. Paul, when they do rates and T yields, they now have 3 more good years to add in a lot of this organic data. And when they do that, they don't have as many years to compare it to or to add it into that they would on conventional, so it's going to have a bigger impact. You know, when you're looking at conventional information, conventional crop, they've got years and years and years worth of data that they can kind of use to compare stuff to and where that it fits in the mix. Just like adding 1 year into a 10-year database, or do you only have 4 years in your database and you're adding a year in? It's going to have a bigger impact on it. So I've seen the organic yields moving more than I've seen the conventional yields moving. So when it happens, and you know, your agents should know, because when they go out to the schools with the companies like myself, they should be telling them that, okay, you guys, this year your T yields are all changing on corn, or your T yields are all changing on soybeans. So they should let them know. And I would think that you would see way better rates and way better T yields coming up on corn and soybeans within the next couple of years, just because we've had some good years and we've come off of a couple bad years prior to that. So you can see a big difference there. Okay, one of the other things I wanted to talk about here was SCO. Okay, so now this year with the Farm Bill coming out, everybody is redoing their PLC and their ARC elections. So SCO is available more maybe to some people because there's going to be less people taking ARC on all their crops. I think, is it soybeans they're expecting to go PLC this year more, I think? Yeah, I think the price is up a lot higher. So I think on soybeans, the outlook is that they are probably going to go on soybeans. But the SCO coverage is an option that would be out there for farmers to pick up some extra coverage, because you can have that on organic, and you can have organic pricing on that. So I want to point that out. I only have a couple slides in there with it. For people that want to know how the SCO works, SCO takes your MPCI net, or kind of worth, crop worth per acre, And what it ends up doing is you end up having a band of coverage between your MPCI coverage level and 86%. So let's just say you have on this one a 70% policy, your SEO is going to cover 16% band across the top of that. You're actually going to use, when you look at the top of this right-hand information here, that supplemental protection comes from, that 618 comes from his policy. So he has coverage out there. Now this isn't an organic example. I just use normal pricing on this. But he's got a band of coverage out there, and then the county has to come in at a loss. We're done looking at his MPCI policy. Now the county's going to look at what they expected, like your area plans or your old GRIP plans. You're going to look and see what the county expected yield and expected price is, and then at the end of the year, you're going to look at what the final harvested yield and harvest price is. And if the county comes in at a loss and it's below that 86%, so more than a 14% loss, then you'll get paid something out of your SEO policy. The amount you'll get paid will be based off that band of coverage that is based off his MPCI crop worth. So this guy's got, this price happened to go up in the fall. We end up raising his coverage. So in kind of down here in the middle, he ends up with a dollar value per crop per acre, $664. So about $665 of coverage. $665 is what his corn is worth per acre out there at that stage of the game. And then that's what we're going to use on that second part there on the right, the higher supplemental protection. That also raised his coverage on the SEO. SEO is much more subsidized than the other plans out there. Plus, you're insuring only a small amount, whether it's 6% or 11% or 16%. You're only insuring a smaller amount out there, but if you can do that at the organic prices, it's a way to gain that extra coverage that you might be losing, you know, at some of your transitional ground out there. So that's something that you can consider. The extra subsidy is what makes it so appealing, but we are getting a lot of questions on the SEO now that the new Farm Bill is in place and people can reselect their PLC and ARC. You also don't have to insure 100% of that band anymore. They actually apply a coverage level to that SEO also. Enterprise units. You brought up enterprise units since you guys have crop insurance policies. Typically, most people know about enterprise units by this stage of the game. So much of our book of business has went to an enterprise unit so they could buy up to the 80 and 85% coverage levels because it makes them more affordable. And they get coverage that kicks in at a much sooner time than when they were only at a 75% level. So just keep in mind, enterprise units is still going to throw together your certified organic, your transitional, and your conventional crop in the mix when you have a loss at the end. High-risk land, I see you guys do have some high-risk land over in Indiana. So just keep in mind that you can still have organic coverage on crops on high-risk land. You still get to use the certified organic pricing on that. If you're insured on that, typically high-risk land just means that you're going to get charged a lot higher premium because your ground might flood a lot easier and stuff out there. So just be aware of that. But you can get coverage on it. And then you can always try to fill out a written agreement to get a better rate on it, even if it's organic crop out there also on your high risk. So that's something that you'd want to ask your insurance agent about.
But if you farm it organically, it is on your plan certificate, you can insure it as organic?
Yes. Oh, you may fill out a written agreement request to get a better rate.
Okay.
But if you farm it organically and it is on your plan or certificate, you can do it as organic. So I'm just saying you can.
You still have to have written agreement.
To get a better rate, you have to have a written agreement, but on high risk, you don't have to have a written agreement to insure it.
Right, you get a written agreement though.
Yeah, you'd still want a written agreement to get a lesser rate, but you can still do it at the higher organic price so your coverage stays high, so your guarantee stays high. And I just threw that, the not on transitional, you can insure your transitional still in high risk. You just can never have the certified organic price on transitional ground. So I just wanted to make sure and keep pointing that out. Prevent plant, if you have prevent plant acreage out there and it's your organic ground, you get paid for it at your organic prices. So that's a positive out there also. You don't lose a lot of money by only getting paid that $4 a bushel on a prevent plant loss. Again, a prevent plant is paid at a lot less than a harvest loss is paid at, but you have the coverage there. What about those T yields during transition? Another way that you can avoid having that pitfall there of having that lesser coverage, I've seen a couple people do this before, is they've gone out there and they've planted hay or alfalfa, something that they don't have to do a whole lot of maintenance on maybe. Maybe they can use it on their farm. Of course, where I'm from, we have a lot of dairy cattle out there. So they can always use the alfalfa on the farm. If you can plant something like that and let it go 3 years while it transitions, then when you're ready to jump into an organic database on your policy, you might get the lower yield right away, but you got the better price. And so that is going to help, drag your coverage up a little bit on that. So if you have the ground that you can, spend the time to go ahead and transition it through, like with alfalfa, and leave it out on the ground there for 3 years. That's one way you can get by with that. A couple of situations, things that happen out there on fields. Yes.
Question about the hay. I was told last year I had a field that was alfalfa. We took a cutting in
Yep.
early April.
Okay.
And then put it to corn.
Yep.
I was told I wasn't able to insure the corn because it was second crop.
Well, did you insure the hay? You usually only have first crop, second crop if you insured it, because it's first insured crop, second insured crop. So you should probably re-ask your agent about it. Did they ever do any work on it? Is this last year? Well, you can insure your corn now, but
Unfortunately, I had that exact same thing. Guy didn't claim, his claim got denied, so
okay.
he took a cutting of hay and
It depends on how long ago it was too, because the cover crop rules allow you to terminate the crop prior to planting. And I don't think, you know what, the thing, yeah, it was harvested for sale. That's where you're going to run into your issue. Yeah, you can't take the,
Thing is FXC corn,
yeah, yeah, that's true.
FXC beans. In our area, you don't deal with that up there probably, huh?
We do not have it up in Wisconsin, but we have it in Iowa. No, let me think about that. Not following, no, we don't have it in Iowa either. But I've seen it around, yeah. Yep.
Organic grain, certified organic grain, crop, part of our farm is in that. Part of it is in specialty crops. And when what you just talked about, that happens a lot.
Which one?
That you have rotational crops on the same land throughout the year. Throughout the growing
What-
season. So you're saying that that negates insurance?
Well, that depends on what kind of crop it is.
Well, that would be specialty crops.
Right. We have, the one thing that we do have following other crop is beans. So we can actually have like our snap and lima beans because they're shorter seasons. So we can.
Specialty crops, we sell farm to school, hospital outreach programs, it's food consumption.
Yep.
People.
Yep. But so are you insuring those?
But then we also have, well, right now it's under NAP.
Okay, right. And that's the reason. So like underneath a normal RMA's crop insurance program, a lot of crops like that sometimes are not covered. So there's no set amount of rules for them. But if there is, like let's just say carrots and cucumbers cucumbers are later, but let's just say you have cucumbers and lettuce and they can follow each other, or out there in a field. They would have probably a practice called following another crop or not following another crop. A lot of that has to do with if it's not following another crop, a lot of times your yield is higher. If it's following another crop, your yield will be lower. So they want you to have different databases on those. So it's possible that you can have those and still have crop insurance. The other thing, and I might still have a slide for it, I know I was creating one, is a whole farm policy, which a whole farm policy runs off your farm's revenue from your Schedule F, and that's what we base coverage on. But I'm only going to mention that for a minute or so.
We only have about 3 or 4 minutes left.
Okay. Just very quickly, things that do happen out there, whether you're a conventional or organic farmer, if something happens to the field out there where it gets sprayed and it shouldn't and your crop dies, there are rules that let us not put those bad yields in your APH and hurt you for the next 10 years. So just make sure if something like that happens on your farm, number one rule, contact your agent so that your insurance company can work with you on that. It's not a payable loss at all because it's not an act of Mother Nature. But if it happens, we actually don't want to hurt the farmer. So those are rules that actually we've been waiting to see for about 20 years out there in the field. But if something like that happens, let us know. Certificate status, I'm not going to run into all this, but nobody goes into organic farming thinking they're going to get their certificate revoked or their status of their organic farm would change. So if something happens with your organic certificate, you really just need to let your agent know so that we can make sure that your policy is set up correctly for insurance. And I think, I just throw a recap slide up here. I do want to mention the whole farm policy just briefly. That is something that's a little bit newer out there. It does run off your tax records. Any revenue that you do make off of your farm, if you have 5 years of farming history and 5 years of Schedule Fs, with a lag year, so like for this year, if somebody wanted to sign up for that, your 2018 would be your lag year. So you'd give us your 2017 back 5 years. Schedule F, we'd go ahead and run those through our process, figure out what it is that you're going to plant, how many acres of it, what you're going to get for it. The big thing is that we need to come up with the yields that you want to use for that policy and the prices that you want to use for that policy for insurance purposes. And then you basically select your coverage level. A farm like yours where you have probably several crops out there, you have a wide variety of risk already out there that kind of overrides, each other a little bit. So it's actually a lower risk for us as a company, so you get rated less on it. The more different commodities you have, the higher coverage levels you can buy and the lesser rate actually it is, and the more subsidy you get. So that's kind of a thing out there. If you have an insurance agent now, or if you know of one in the area, you can go ahead and just call them and they can run you a quote on whole farm. It's becoming more and more popular, gaining a little bit of traction, not a lot. For some cases it doesn't work nearly as well. I know that I did do one big CSA farm. He had several acres and he ended up losing like $30,000 on like broccoli. It got a blight. So maybe it was closer to 60,000, trying to think now. I ran a quote for him a couple years ago to find out what his premium would be, and he had like 30 crops. So just try to find out what his premium would have been over the course of 3 or 4 years, find out what he could have gotten covered on his claim because he only had one crop that went down, and he had several more that made it just fine. It wasn't enough of a loss to barely get him much of a claim payment, and his premium would have overridden that claim by a long shot. So he's kind of self-insuring by having so much risk, his risk spread out so much. Some stuff's in greenhouses, some stuff was in the ground. It just matters what kind of farm situation you have out there. But your agent's the best one to ask for advice.
Do you think that'll work for your agents up there?
Do I sometimes?
Yeah, I was just gonna say, hey,
I'm moving to Wisconsin.
He drove up and met me.
that's a little custom view for me.
I have a question
Yeah.
about the certificate.
Okay.
If you have something on shares, how does that tie out? So like, if I hold this organic certificate
And you lease?
What's that?
And you lease ground?
Yeah.
Okay, so if you lease ground, your landlord can insure the same as you do using your certificate.
Okay. But you have to be named on the lease.
Yeah, you should be named on a lease. So there's got to be that paper trail.
Okay. But a non-related party that sells under a certificate cannot insure.
There's no other way that I can think of that you can do that. Typically, it's just really a landlord-tenant situation. If you guys have questions, I can't give advice because I actually work for an insurance company, but there are business cards, and at the conventions and stuff that I do go to, if people want to give me a call for some rules, even if you question your agent, I might call your agent and correct them too, but
Question my agent all the time.
Yeah.
I'm pretty sure he doesn't know what he's doing.
Oh.
Half the time.
oh Lord,
I think he drinks too much.
which one's that?
My agent?
Is that you?
Probably.
Oh. I don't know.
Now for 2 minutes.
Yes, I am. Yep. A little redheaded boy, he's going to come and get me pretty soon, but I'll probably drag him in so he can look at the big red tractor.
So on that note, folks, that'll wrap up this session today. Let's thank Roxanne